So a lot of things has happened over the past days with the USA-Iran negotiation, the deadline for the attacks, the blockade on the Strait of Hormuz, but Bitcoin is back inside the range. I think this range will give us some surprise because we have been here for a pretty long time. And everybody's getting a bit bored of this price action, and that is exactly the moment where usually Bitcoin likes to surprise people. So we are finally back with a market weather bulletin. Today is Monday, 13th of April. We skipped the last week due to the Easter holiday, but now we are back and we are ready, as always, to check that Bitcoin chart from high time frame to low time frame, to map levels, to form a bias, and then to see if we can find some trade setup. The approach is always the same: super objective, super discipline, using pure price action to try to form some reasoning behind potential positioning. So without further ado, let's move to the Bitcoin chart and see what is happening. So on very high time frame, what is happening since beginning of February? More or less nothing if we look at the grand scheme of things. So we are doing what Bitcoin likes to do best, that is ranging in a pretty wide range. Let's say is around 10k movement from 65k, 64k to 74k, but mainly we keep being trapped on this range. On a time frame, very briefly, because more or less is the same on every market weather bulletin over the past 8, 9, 10 weeks, we know that we are more or less retesting this old range we have been trading for pretty long time, I think 9-10 months back in 2024. So it's sort of a bullish retest. If this was, let's say, a resistance level or something like this in the past, we saw that we broke above, we are retesting and potentially going higher, but this is a super very high time frame view. We also know that Bitcoin locally, let's say in the weekly, in the 3 days, in the daily, in most of the time frame, is in a high time frame downtrend since we lost this high time frame uptrend. So we do have a, let's say, high time frame bearish bias because of this downtrend, and the break of this downtrend is super far away at 97, 98k. But we also know that during this downtrend we started to go laterally. How we started to go laterally? We started to go laterally as Bitcoin usually does after a very strong impulsive move. This is another recurrence of Bitcoin, that we have very impulsive move and then we start to go laterally. Very impulsive move, we start to go laterally. So we had the same here on the way down. We form a top here with a bearish deviation on top. Price started to push lower. We started to go sideways, bearish deviation on top. We started to go lower, and here is where things are actually moving so far. We also know, just to make a recap of what we know that many times, not always, Bitcoin likes to form lows, high time frame lows, with sweeping off the previous lows, and we know that usually Bitcoin often, not always, when it forms this series of higher lows, higher lows, sorry, like the one we are forming here, like the one we form here, is potentially going to take them out sooner or later. Nothing on this is a guarantee, is a recurring pattern that sometimes might also not happen again. So we create a puzzle with all this information to form some logic, always logics that should bring us to some actionable positioning based on probabilities. Nothing here is based on certainties. So if you're looking for certainties, change YouTube channel, change X page, because traders usually do not work in certainties, and I'm a trader and I work on probabilities. So we know that there is many, let's say, potential bearish indication here. Let's say the bigger one is the downtrend. The second bigger one is that range have been deviated above and many lows has been left behind, not taken out, but we have, let's say, a little also bullish, or I don't know how to say it, neutral view on the fact that we are still giving a bullish retest, because this is of this old resistance level that you see was resistance. It was resistance, was finally broken, then we traded above for pretty long time, and we are more or less still trading on the boundary of this old demand, old range, or whatever. If we want to look at this a little bit more objective, we know that the volume exchange in this level gave us more or less this level here. Is a very wide level from 71 to 56, so not really actionable, but as you can see, we are still retesting more or less this bigger level. So we do have some indication, we do have some high time frame bias or logic or thesis behind the current price action. We also need to map some level, so I will say at the beginning, not very actionable. This would be the high time frame market structure break. As you can see, is very, very far away, because the current structure is, let's say, on high time frame, this one. So to break this structure, Bitcoin should have doing something like this. So technically, as long as that high at around 98, 99, 100k more or less is violated, we are still in this bearish structure. Also, we know some more relevant level that we have a few low, the last one unswept down here. We know that there is also a very close low here, not that important, but just important the fact that when we drop down at 60k, we didn't take out this low, so we have plenty liquidity down below. We also know that there is these boundaries, liquidity boundaries, external of our range, and I think we also know, probably is more visible, something like this, that we have some sort of equalize here, not that evident, but around that level. Then we know that there is all this liquidity down below. So just to have a very broad mapping on the daily, let's say, chart. We go a little bit more on zooming in a little bit to see what is happening on this range. As we said at the beginning, we know that it's super normal for Bitcoin to range for weeks, months, sometimes also for 9-8 months. This range has been formed back at the beginning of February, so we are 2 months and something within these boundaries, perhaps around 9 or 10 weeks. The most objective way to select the boundaries of this range is the fixed range volume profile, or we can use also parallel channel, but let's keep it with the fixed range volume profile. Since I start my style, then anybody is free to do as they wish. My style is to select from the beginning of the ranging environment, and the ranging environment started when we formed this low down here. I got many questions lately, probably many new followers. I use the volume area 90 instead of the classic 70. If I put 70 here very quickly, will not make a lesson on this. You see the boundaries of the range become much thinner, much closer. This is what books and many people do. I'm totally fine if they are happy with it. I prefer to use 90 to answer once again the question, because it gives me more extreme level on the range. So the higher the value area, the more high you go for the value area high, and the lower you go for the value area low, and there is where I like to do business, more in the extreme, because this is there where you get a better risk reward. In the Learn and Trade playlist here in my YouTube page, you will find a video back on the early one where I explain fully how I use fixed range volume profile and my setting, but just to make it super quick explanation for the many questions I receive about it. So I also like it because many times it works. So if you look at this fixed range volume profile, you will see that with the 90 levels we got exactly this bottom I didn't trade it, but this was interesting button. This was the beginning of the negotiation or the postponement of the deadline. Then here there was somewhere the announcement of the negotiation, and you see over the weekend we had the harsh closure of the negotiation in Pakistan from USA and Iran when JD Vance left to go back to America. So as you can see, value area low, that is this level here, and value area high created really the boundaries for this upper move. So there was a down move, upper move, and we are back there. So the point of the market weather bulletin is not to brag and not to speak about old positioning, but let's say I fumble a short that I open exactly on this value area high and the confluence of this Fibonacci, and I think that was a pretty good short because the entry was somewhere there. But again, the point is not to speak about the past. There is the good, the bad, and the ugly YouTube series that I post once a week where I explain my trade setup, what went well, what went wrong. So the point of this is to look for the future. So what we know about this range? So this is a range that is pretty old. So being an old range has two characteristics. First is a range full of information somehow, if you are able to read, and is also a range that is approaching perhaps some sort of maturity, some sort of age. So what happens usually with the range when they form some sort of maturity is they tend to somehow break or start to move to the extreme. Why? Because price has been exchanging, auctioned here inside very long time. So after, and I don't have a rules, I don't have a data, I don't have a date, but what I know is that range when they start to form for a very long time, they might start to go to the extreme or to the extreme, or they potentially finally break. So while a fresh range, you see, is more compromised within its boundaries, then it gave a deviation, then come back here, old range, let's go to see, you see, start to break once again before making a move. You see this was a range that was already deviated. What happened? It went out, deviate once again, and then going down. I think a very famous range in this regard was the very big one, just to show you the example, this one of 2024, that now looks very clean, but you see how many times it swept the low, tried to went up, nothing, swept the low, tried to went up, nothing, went down without whipping the low once again, and then it started to move up. Why range sometimes have this kind of behavior? They have it because they need liquidity, they need power, they need powder, I don't know how to call it, for the price to do then this. So they need to constantly hunt for liquidity. In this case, the move was supposed to go up, so they need to hunt for liquidity lower many times to take a lot of liquidity, take out all the stop loss or the take profit level we had here to clear the market, to load the liquidity, and then to move higher. As you can see, this range was very, very long. At the beginning, it looks very clean on these boundaries. Then it started. You had this deviation here below, you would say, okay, we are done. No, we are not done. We come down once again. We come down once again. Everybody capitulate, everybody lose, everybody stop it out. And then finally market is ready to move. So this is like not common, but the more a range is mature, the more you can start to have this sort of wild price action if the range is not finally broken. So this, again, some part of the puzzle we put in the back of our mind. Objectively, what we know about this specific, as I was saying, there is many information, is we know that the boundaries of the range now are these, the external boundaries, let's say liquidity boundaries. These are somehow the internal boundaries given by the value area of the fixed range volume profile using the 90 value area, and we know that the last deviation was in top of the range. What this last deviation created, you see, is the last move outside value area I. It created a move down, a pretty decent move from 76 until 64, but we also know that after this move down to 64, somehow price bounced again from value area low and again started to push to the other boundaries of the range. So it didn't happen that that deviation created a move down to the lower limit of the range. So this is one of the first things we have to consider. Price move again against value area low high and got rejected. So here there is two options, I think, trading wise. One is the retarded and one is the wise. Which one will be prevailing, I have no idea. As I was saying in the beginning, is more a game of probability. And both are, let's say, logically and correct. So the first one is the retarded, and the retarded often win. The retarded here this is value area I. Price went to value area I with a bearish divergence, so you see lack of momentum here, price forming higher highs and the RSI more or less flatten, not forming higher highs. After this move to value area I, what we get a bearish market structure break, and now I don't know, you can use the 4 hour, you can use the 1 hour, more or less is here. If you use a little bit higher time frame, it didn't really happen. So the market structure break happened somehow in some time frame after the rejection here with the bearish divergence on RSI. So the retarded trader would say, this is a rejection at value area I. I'm a range trader, and at value area I always look for short. If I see a rejection and if I see a change in structure, because here there was a bullish structure, correct? If I finally see a bullish structure, for me, is interested to look for short. So this is the first approach, the retarded one, and you will see later on a potential trade setup that we will call it the retarded trade setup. So the caveat here is that we might also have, let's say, the smart trader, that I'm not sure is more profitable than the retarded one, that complicate this analysis a little bit further and say, yes, it's true that the price went to value area low, now it's back at value area high. Value area high for a range trader is normally a place we look for short because we are in the discount, in the premium, area. In the discount down here we look for long, in premium we look for short. It's true that here we have to look for short, but there is a complication. What is the fact that the last bearish deviation on top produced already a move down. This move down was counterattacked by buyers that defended the discount level or value area low here and pushed the price higher here. So the smart trader, differently from the retarded trader, here start to complicate things, or perhaps having a better judgment, say, look, this is dangerous area because this area already was somehow played out, he would say. So already we had this gave me this, so why I have to think that this will give me this again? I think the clever trader would say, I think that to come down really here or down here, price should potentially go once again higher, once again hunting for liquidity, once again taking out stop loss position, whatever it is, to really fully then have the power to go further down. So the clever trader will say, no, market here want to trick me. I'm a very clever trader, I'm clever, I don't know how you say, more clever than the retarded trader. I'm not trading this level, I'm waiting here, because if I trade this level, somehow I will stop out. Both the retarded and the clever trader have a logic behind their reasoning. Both the logic are, to me, valid. I don't know which one will be right, only the market will be telling. Why both the retarded and the clever trader here are looking for short? I repeated already millions of times. Not because I'm bearish, not because I want to see the price going down, not because I think the price will go down. It's just a logic of positioning in a range. So in a range, so market can do three things. We always remember this: uptrend, downtrend, So in an uptrend, I always look for longs somewhere here for a continuation. In a downtrend, I always look for short continue here. In a range, I always try to position myself short at the top and long at the bottom. Nothing else, nothing personal, nothing against Bitcoin price going higher. Here in this case, we do have two things. We do have an high time frame downtrend, the one we saw before, and we have the fact that we are at range high. So here, positioning wise, to me, there is zero interest for longs. Then it can break out, position can be stopped out, everything can happen, but to me, if I'm given this situation a million times, I will always look to position myself short in a high time frame downtrend and at value area high or range high in a range. And I know that if I do this a million times, I will have an edge over millions of repetition. Then some of these for sure will be stopped because range then potentially break and stop out even range trader. So this very brief explanation why I'm looking for short here rather than longs. So I think we had a bias, we had map level, we also have a retarded and a clever trader fighting each other on who is right, who is wrong. What we miss now is simply some trade setup. So if you want that I will share with you for both cases what I will be looking for exactly in terms of entry, invalidation and taking profit. But if you want to trade Bitcoin and many other altcoin, the best place to do and to do it with me is on VX Pro, a super cool exchange that has zero slippage, zero fees on spot trading. You will find the referral link down in the description below to join VX Pro together with me. This is, let's say, an advanced terminal to trade, better off the many tools you find out there. Is also good for beginner, but you will see that in VX Pro you will also find some advanced tool for managing your position, in managing your trade. So very good for beginner, but also if you want to step a little bit up your game, this is definitely a good place to go. And if you want to go, just click the referral link down in the description below to enjoy also a discount on trading fees and to support also my channel here in X and in YouTube and in X. So we are back to our retarded and clever trader. I prefer to start with the retarded because I consider myself a very retarded trader, and here I think the setup is already there. So the setup is already there because we do have a little bit of confluence with Fibonacci. You see that this higher move, so we know that here there was an uptrend. Now I draw it like this. It break down. You see it break this low. If this was the high, low, high on a time frame, this low was broken. So this is a bearish move because it formed a lower low. And this is the retest of the 0.75 level. And exactly there we got rejected. So in a time frame already we have some clue. We also know that this was value area high. And this also is confluent with 0.75, and also this level gave exactly the rejection. We also know, as we saw before, that there was a bearish divergence. Following this on lower time frame, if we look at this structure, I don't know, 1 hour probably, look, high, low, high, low, high, low, high. So here there was for sure a low time frame structure, but here 100% there was a 1 hour time frame market structure break that to me is also visible on the 4 hour. So we had rejection at 0.75 of the bigger leg. The rejection is also at value area high, and in the 4 hour there is also a very beautiful bearish divergence. This all was followed by a market structure break, so to me this is already a decent trade setup. Is a decent trade setup. Why? Because at this level we do have confluence, let's say, of several factors, and we do get let's say, a easy invalidation of this trade. Doesn't mean that it will for sure work. So if we pull the Fibonacci of this level, if we look at supply somewhere here, last green candle that created the impulsive move down, we are here, so we know that more or less in this level we can have an entry justifying. The invalidation is what is the strength of this trade, because already here there was a market structure break, so we do not see the price to break once again above val, above that area. So to be a little bit safer, we can be somewhere here, but there should be no point to go above, let's say, this high and above a little bit more in this high, because in the case price start to move above here, the smart trader will enter in action and will say, look, I was right, we are probably going to take out this. So no reason to have a stop loss in that case, because in that case that would be the other trade. It would be the trade of the smart trader that we will see later. So what is the benefit of this, let's say, level, is that it gives us this logic, let's say, the retarded traded logic that believes that the value area high, the 0.75, the bearish divergence, the market structure break already trigger this trade, and is retarded and deep will play always short at value area high. So it will give them a good entry in case the market bounce, a good invalidation not so far away from the entry, but you will also get a very good risk reward, because he's a retarded trader, and the retarded trader believes that once the price is rejected at value area high, he should go to visit mid-range and value area low. So this is the sort of trade that the retarded trader is getting. Is a 4-hour trade. If he stop here, or if he's lucky, he can leave something going down to get a 6 or 7 risk reward trade, because potentially also this support will lose and we will go to the further external extremity of this range. So the retarded trader would trade something like this. So already explain everything, I think. Rejection at 0.75 of this move, rejection at value area high, bearish divergence on RSI, followed by a market structure break. We are already triggered, we are already on a level of interest. We believe this was the rejection at value area high, so we are happy to take this retarded trader once again, looking for the price to go lower. As always, could spread order down below here at the Fibonacci golden pocket to take all these in case not to be front run, to be somewhere here, and spread them all the way above to the 0.75 level. So already this is a fair trade and a retarded trade, but in this range retarded trader would have make pretty good money. Also see how much 0.75 it's working. You see 0.75 of this move, bump, 0.75 of this move. This would be confluent, let's say, with something that start to look like this. That is more or less a huge compression here. So the more you use this 0.75, the more price becomes choppy, the more you get something that looks like this. So everything explained for the retarded trader, but we also have here in the room with us a smart trader, and he doesn't believe this is done here. He believes that this deviation was not enough, as explained, because this deviation just managed to go to value area low, so price could move higher, so he doesn't trust this setup, so he believes that here we will get some more fuckery, and the price will eventually do this. This trade is a little bit more difficult now because we don't have so much information, but this could potentially be another short for more patient trader or smarter trader, as I was joking until now, and this trade might look something like this. The point now is difficult to know, or might look something like this, because you know we mapped at the beginning of the video the liquidity level, so we don't yet know in case this value area high truly breaks. So price once again, like it did here, break above value area high. So what we know, we know that in case it breaks, we will be a little bit less comfortable in short. We will still look for short, but we will need a little bit more of a trigger. What is the trigger? Is the market structure break. So we will be vigilant. The smart trader will be vigilant at this two liquidity level. He will try to do business at these two liquidity level. He will expect the price to move higher, something like this. But after the sweep, he will wait for a market structure break. So I yet don't know. The smart trader is very smart, but is not able to look in the future. He doesn't know where the price will stop. So he will look for something that looks like this. He will be trying to short something that looks like this, either on the first liquidity or in the second one. Okay, so the stop above the sweep of the highs or the sweep of the equal highs, it will enter in a retest after a market structure break, and ideally it will look to have this move, either this one or either this one, out with a bearish divergence. So it will expect the RSI to go higher and then go lower to create this divergence. So this is potentially the smarter trader plan at this moment. It's not yet a trade setup, to look for something like this with the same concept: first TP at mid-range, second TP at value area low, and then potentially final TP down at those liquidity pool we left below. So I think we discuss many things. We discuss overall bias. We discuss key high time frame level. We discuss a lot about this local range. We met the clever and this retarded trader. Both have argument for a trade. So now we will leave the market do its things and see if the retarded or the clever trader would be right or wrong, or profitable or not. But I think what is important here is not being right or wrong. What is important here is to formulate a trade, formulate an actionable setup with as much as more logic as possible, because it will help us then to guide us on the management of this trade. The point is not to have a 100% win rate, but is to formulate and to articulate a logic behind the trade that we will be able to explain basically to ourselves, and to say, I'm not an idiot, I'm taking trade with some reasoning, I'm happy with both the outcome, right or wrong, but as long as I have a reasoning, I will be able to justify to myself the trade, to journal my trade, to review my trade, to grow as a trader, because there is a complex, or not complex, according if you are a retarded or a smart trader, but there is a system, there is a reasoning, there is an edge, there is rules, there is something that allow you to improve and get better as a trader, because you use brain and you simply not trading due to emotion or copy trading other people, but you try to develop a systematic approach to the market that will help you in the long run to be profitable, hopefully, but also to improve and develop your logic the more, and understand how the market works, and try to read them as best as possible. So if you are in this process, a very good partner would be X Pro, where I take most of my crypto trade. You will find the referral link down in the description below to join and to enjoy a 20% discount on trading fees. So do not wait further, join VX Pro with me. Also make sure before leaving to subscribe to the channel, leave a like and a hype bottom, and ask me anything in case anything in this video was not clear. We'll see in the next one. Stay safe out there. Bye.